Welcome to RBC's Markets in Motion podcast, recorded November 5th, 2024. I'm Lori Calvasina, head of U.S. Equity Strategy at RBC Capital Markets. Please listen to the end of this podcast for important disclaimers. We're recording this on the day of the U.S. presidential election, and that's what we're going to focus on today. There are 7 big things you need to know. We promise we'll run through them as quickly as we can. They focus on the setup, the historical playbook, bottom-up policy implications per our analyst survey, thoughts on positioning trades, one tailwind that will manifest regardless of what happens, tail risks, and our rundown of what we'll be watching tonight and possibly the days beyond. If you'd like to hear more, I'm not even going to try to guess how long this is going to go. I'll keep it as quick as I can. Let's just get into the details. Starting with takeaway number 1. The setup has evolved a lot, and it's not easy to say exactly what's baked in right now. We've seen several big shifts in polling and betting markets in recent days, weeks, and months, and think it's difficult to know with any degree of certainty what the outcome will be. The national polling averages point to a close race, with some late-breaking states polls, specifically the Iowa Seltzer poll, shining a light on the gender gap that's been seen in many polls, reminding us that turnout will be key and making us wonder if most pollsters are weighting their polls correctly. Betting markets, which we think influence hedge fund expectations, still have generally favored Trump, though expectations for Harris have improved since late October. The long-only investors we've spoken with recently just haven't had a clear view on the outcome. Moving on to takeaway number 2. We are less interested in short-term election trades right now and more interested in any longer-term opportunities that open up if we get some big gaps up or down in equities. This is my 7th presidential election as a strategist on Wall Street since I joined the business back in 2000. One of my core beliefs about elections and the U.S. equity market is that the latter must endure temporary repricings around this event every few years, but these dislocations do tend to be temporary in nature. Our historical playbook analysis reminds us that the S&P 500 tends to rise regardless of the balance of power in Washington. The strongest backdrops have tended to be a Democratic presidency with a split or Republican Congress, or Republicans controlling the White House along with both chambers of Congress. Next up, takeaway number 3. There are bottom-up policy implications in the different possible outcomes of the elections, but the tilts for the U.S. equity market broadly are pretty mild. The U.S. results of our late September RBC analyst survey lead us to this conclusion. We asked our analysts to evaluate the outlook for their industries under 4 outcome scenarios. The scale was from +2, very bullish, to -2, very bearish. 0 represented neutral or mixed, +1 represented bullish, and -1 represented bearish. Looking specifically at our U.S. analyst responses, in a Republican sweep, the average score was a positive 0.38, and in a Trump's win with a split Congress, the average score was a positive 0.22. Both of those numbers are positive, but frankly closer to neutral or mixed than bullish. In a Democratic sweep, the average score was minus 0.24, negative, but also closer to neutral or mixed than bearish. In a Harris win with a split Congress, the average score was minus 0.04, literally in line with a neutral mixed view, and we also saw that in place for most sectors. Note the Republican sweep score is probably a little bit too high. Last week, our home building and biotech analysts told us that they'd become less optimistic for their industry outlook in that scenario due to recent developments on RFK Jr. and interest rate dynamics. Our survey work has also helped us understand that policy cross-currents for U.S. equities are quite complex, with our analysts generally seeing Trump's approach to regulation and taxes as positives, but his approach to trade and tariffs as problematic. We also think it will take time, particularly if Harris wins, for investors to understand what the priorities of a new administration will be. On this point, exit polling, which will highlight who turned out and what issues influence their vote, may also help investors understand what policies might be prioritized in a new administration. If women turn out in large numbers due to views on abortion propelling Harris to victory, for example, her administration could interpret that as a mandate to focus on issues like women's health and reproductive rights, which the stock market frankly seems unlikely to have an opinion on. Moving on to takeaway number 4. In all outcomes, the S&P 500, financials, energy, small caps, and Europe will be most in focus for us in the days ahead. Financials and energy were really driving the bullish tilts in the Trump win scenarios and the bearish tilt in the Democratic sweep scenario in our previously mentioned analyst survey. Small caps are a classic Trump trade. Positioning in small cap futures surged in 2016, 2017, and 2018 on economic optimism around Trump's first victory, the corporate tax cuts of 2017, and the early stages of the China trade war in 2018. Russell 2000 performance has also become aligned with Trump in betting markets and polling averages recently. Harris's desire to raise corporate taxes would be a problem for this part of the U.S. equity market based on what we saw before. Meanwhile, Europe could outperform as Harris wins, given non-U.S. investor views on Trump's approach to NATO, which we've heard a lot about from European investors over the past year. We also found that in the first half of 2024, U.S.-European equity performance tracked Trump and the Trump-Biden spread in the polls and betting markets. To a lesser degree, we'll also be keeping an eye on consumer discretionary and industrials, given Harris's focus on consumer and small business stimulus initiatives and investor concerns about tariffs from Trump. Industrials also performed poorly during the China trade war and are quite expensive on our models. It's also worth keeping an eye on the reaction of 10-year yields to the election outcome, which could adversely impact the stock market due in part to the relationship between interest rates and PE multiples. Next up, takeaway number 5. In all 4 outcomes, we think U.S. equities may benefit from tailwinds associated with the passage of the event, as long as a clear winner emerges. In our conversations with investors and review of company earnings call transcripts, it has been apparent to us that many have become stuck due to uncertainty about the election, and that this uncertainty is acting on a restraint on both trading and company behavior. Simply getting past the event may help things get going again. Moving on to takeaway number 6. What could go wrong? In our client conversations, investors have been concerned about a lengthy contested election, and rightfully so, as the 2000 election saw the S&P 500 fall nearly 12% between Election Day and the December lows. A close contested election is the main tail risk we see for U.S. equities in the days and months ahead, though we also suspect that a Democratic sweep could catch U.S. equity investors off guard as well. We don't think a Democratic sweep is likely given how hard the math is for Democrats in the Senate, but we do worry a little bit that the risk of this outcome may be underpriced. It's just not on anybody's radar. Wrapping up with takeaway number 7, we're not making a call on the outcome of the election, but we do want to highlight what we'll be watching on election night and possibly beyond. Like everyone else, we'll be watching the 7 key swing states, along with Iowa, where new polling over the weekend indicated Harris had pulled ahead of Trump. In the Senate, we'll be watching Montana, Texas, Ohio, and Nebraska. Montana and Texas are rated lean Republican by 270 to win, but may represent the Democrats' best shot if there's a surprise in terms of Senate control. Ohio is viewed by election forecasters as a toss-up, but currently held by a Democratic incumbent. In Nebraska, an independent is challenging a Republican incumbent, and while polling has been light, what is out there points to a tighter than expected race. In the House, we'll be watching the 21 toss-up races, most of which are in blue states or swing states. And as noted earlier, we'll be keeping a close eye on turnout and what issues drove voters to their ultimate winner. That's all for now. Thanks for listening, and be sure to reach out to your RBC representative with any questions.
This content is based on information available at the time it was recorded and is for informational purposes only. It is not an offer to buy or sell or a solicitation, and no recommendations are implied. It is outside the scope of this communication to consider whether it is suitable for you and your financial objectives.